Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Sunday, May 22nd, 2022, and this is Blockhead Traders Weekly. In this week's episode, I am all by myself, Sprocket888 here, and I am going to talk a little bit about the panic in the markets. But before we hop to this week's content, I want to give a shout out to our Discord, link in the description below. Hop in there. You can say hello to myself or any of the other Blockhead traders. Love to hear what you're trading. Love to hear the content that you'd like to hear about, and we will do an episode around it. But let's hop to this week's content of absolute panic in the market. And I don't know about you guys, but things are not going that well for me and my portfolio. And it is a very discouraging and trying time. And I just wanted to take a real brief time here in this week and just give a shout out to that to let you know, like, hey, the stuff you're feeling, the pain you're feeling, everyone is feeling that. And, it's times like this that I like to try to remember why I'm trading and remember what I was trading for. So this is like, I don't know, the seventh or eighth consecutive week where the indexes have just been declining. We're down just about 20% off the S&P highs. That is like the official end of a bull market marking when you get a decline of 20% or more, and the S&P is right there, basically touching on bear market territory. At least it was on Friday's market action. And if you turn on the media, you pick up a newspaper, it is bear. Everything's crashing, everything's terrible, everything's going down. And it can really be disheartening. It might be hard to find glimmers of hope or just anything to kind of keep going. And this is going to sound kind of silly, but really, you can't panic. And you'll probably see all kinds of people that say, don't panic. And you read it, and it's a simple phrase, but it's actually kind of harder to do than just to say. And the reason I just have to constantly remind myself is because panic is essentially an emotion. And anytime you begin to trade with emotion, that's exactly the time that you're going to make bad decisions. You might get lucky here and there, but you're not thinking with a clear head. And you're out there, you read all this terrible news and you forget, what was your thesis going into the trade? Is the trade actually busted? Is your thesis really tested? Are you at your exit point? And it's really easy to get caught up in the bottomless pit mentality that the market is going to fall forever. It's going to go to zero. It's going to crash. All your wealth is going to be wiped out. And some of that stuff might be true. You might lose a good bit of money. But that's really where a lot of what we talk about on this channel kind of comes into play. And that's what I want to take time here and remind you and remind everybody, like, you prepared for this. This should be in your plan. And we always talk about, before you enter any trade, what is your plan? Do you have an exit strategy? And not just an exit strategy for green. What's your exit strategy for red? Where are you going to book your losses? When are you going to cut and run? All of those things should be decided before you enter a trade so that when you get into a market situation like this, you don't have to become emotional. You don't have to succumb to the news and the headlines. You pull out your plan and you say, all right, well, what was my plan? Am I at my plan? Is it time to move on? And that is how you execute. That is how you remove emotions out of it. You take your plan before you enter, before your emotions get in there, and you lay it out. And in your plan, you should be considering for what if this stock drops 20%? What if we lose two, three standard deviations? What am I going to do? And you can really only do that if you write this down. So, did you write down your plan? A lot of times you're like, oh, yeah, I got a plan. I put it in my head. And then when the stuff gets real, you don't remember exactly what your plan was, or maybe you'll tweak it in your mind a little bit like, well, I know I said this, but this is different case here. So I'm going to change my plan. And that is really where you can be at risk of panicking. And when you panic and when you sell in a panic, you're going to lock in your loss. There's no coming back from that. Now, that's different than legitimate exit point of your plan. This is when you get emotional, you're not trading to your plan, and you start deviating. That is where your losses are going to get locked in, and that's really where you're going to have a hard time coming back. So think about it. Are you uncomfortable right now in the market? Because some level of discomfort is normal, right? Nobody likes seeing their portfolio down 5, 10, 18% in a session. It's not a good feeling. Now, if you're finding yourself having trouble of moving on with other things in life, you're losing sleep, not being able to focus on other aspects away from the market where you're constantly pulling up the market, constantly looking at that, are the tickers getting redder? Is it falling more? That constant gravitation in there, those are signs, we've said this before, that maybe you didn't think this all the way through. Maybe your position size is too large. Maybe you didn't have an exit plan. Maybe you're getting too focused on one side of the story. Remember, there was a bull side to your trade. Otherwise, you wouldn't have taken it. So when you get a lot of this negative media and this negative bear market news out there, take a step back and think, am I tilting my emotions because I'm focusing too much on one side of the trade? This is the same thing we ask everybody to do before you get into a trade. When you get into a trade, a lot of times you have very bullish sentiment. And before you enter it, you need to take a step back and say, what's the other side of the trade? Where might this thing go on the other side? So what am I doing these days? Kind of just biding my time. Not opening a lot of positions because my capital is really fully occupied right now. I have been assigned multiple positions. So as you know, one of my strategies is to sell naked puts. It is a way that I collect premium saying this stock is not going to go below this level. And if it did, I am confident or I am willing to purchase the stock at that level because for me, that level represents a good entry point in that underlying. And so where I'm at right now is I have several shares from many companies. Citigroup is a big one, Plug Power, Roblox, and all of these positions. There's a few more, but these were all short puts that I sold. And my plan was always to take that in through expiration. And if I was going to be assigned, I was okay with that assignment. And what that basically means is, yeah, if it got below the strike, I paid more for that than the price, but that price was a fair price to me. And I was able to collect the premium, which lowers my break even on those trades. And once I'm assigned shares, my plan is continuing to then sell calls against those positions. Now, you might think, but you're losing money. You'd have been better off just buying the shares. Well, the thing is, you never know when the bottom of a market is. You never know. In fact, timing the bottom, it's just not going to happen for you. You might get lucky once in your trading career to time a bottom, but it's just so unlikely to nail the timing of a bottom. It's just better, in my mind, in my opinion, to constantly be out there and selling at these prices where, yeah, it's under the price when I sold it, but if it gets to that price, I'll go ahead and buy it. I'll sell calls against it, and that will give me more premium. And I make sure that the calls that I'm selling have a strike price above my break even. So this is very important that you track your trades and you track your entry point, you track your premiums that you've collected, because when you get assigned, when you want to try to make back your money and keep going with your trading career, selling those calls against those shares is great, but you want to make sure you're doing it at a strike price that you're not going to book a loss for. Right now, one of my worst positions that are out there are Roblox. This is underlying that I got too large in. I got too aggressive. My position sizing was too much. Um, and I'm pretty far off my cost basis. However, my plan was to take the shares on assignment and to sell calls against it. Now, I'm finding myself in a very difficult position to sell calls because my cost basis is closer to $100 a share, and Roblox is currently in the mid 30s, I believe, somewhere around there. And so to try to sell a call that is at $100 strike or greater is so far away from at the money prices. There's really not a lot of premium in there. And this is one where it's just tough for me because Roblox doesn't pay a dividend. There's no income stream from holding these things. It's literally dead weight in my portfolio. But that was my plan to battle back from that assignment, was to sell calls. And so that's what I'm doing. I might only be collecting $20 a month against these, 200 shares of Roblox, but that's the plan. And as long as that strike price is above my cost basis, I'm not going to lose money by getting assigned. In fact, if I actually did get assigned, it would be a miracle because it meant the stock basically went up $70 in value. So, really, I just wanted to take some time to remind people that when things get tough, like they are right now, when the market slides just week after week after week in a grinding, bearish trend, and the media is just talking about how all these retirement accounts are losing money, how all these traders are losing money. You look at your own portfolio and the value, your net liquidity of that portfolio is declining and declining. It can be incredibly tiresome. It can be incredibly distressing. And you just have to remember you had a plan when you entered. Where are you with respect to that plan? And this isn't a game that you win or lose. Remember, on this channel, we've made multiple references that when you trade, it's an infinite game. And the only people that lose are the people that run out of money, the people that quit the game. That is the only way that you can lose. Your goal is to continue to stay in the market and continue to make your trades in the bad times and the good times. So, when you're in this bear market trend, bring that into your trading strategy. Don't get so aggressive if you happen to be selling puts. Maybe focus in on the more solid, less speculative companies. If the United States is really, teetering on this potential recession, which is what a lot of the media is kind of harping on these days, with interest rates rising, inflation rising. They're really trying to call out the economic recession. So what type of equities do well in a recession? Maybe that's where you focus a lot of your trading strategy. And whenever you open any of these positions, make your plan. Make it for your exit for a green. Make it for your exit for a loss. Put all that down. There is no need to run in and rush in. You're not going to miss the bottom because chances are you're never going to time the bottom correctly. So take your time and do your due diligence to make quality trades that are going to let you stay in the game for the rest of your trading career. It's an infinite game. There is no finite end. The only time this game ends is when you stop trading. So here's to the market and hoping we can get a little bit more of a sideways action, a little bit of recovery, boost some of my spirits, boost some of your spirits. Just know that Blockhead Traders is here as we always have been, showing you what we're trading in the good times, the bad times, and being transparent with all of those trades. So I hope you guys can stay in there. Don't panic. Make your plans, make your position sizing, and remember, think outside the block.